Hi everyone, this is Rohit from Rise from Mastery, and I'm excited to have Victor Pascucci III, who's the co-founder and managing general partner of Energy Capital Ventures, which is the only early-stage capital venture capital fund dedicated to sustainability and digital transformation of the natural gas industry. Victor has over 20 years of experience in venture capital and financial services, which includes $750 million in VC and M&A transactions. Welcome to the show, Victor.
Thanks, Roy. It's great to be here. Appreciate it.
Awesome. So, you had quite a bit of a journey in venture capital, but how do you get into this crazy world of venture capital and what attracted you to this?
Yeah, I definitely took the non-linear sequential route and the non-traditional route. And I think, what attracted me to this industry at the very beginning, or technology at the very beginning, was, at the time, in that point in my career, I was actually a trial attorney. So I was going to court every day, fighting with people, tearing things down, destroying people's cases. A lot of times they're credibility. And, I'd go out at night to these technology events and you meet all these great technologists and venture capitals, and they were building things. Like they were building these great companies, building industries, building markets, building technology. And here I felt like destroying things. And I said, you know what? That looks a lot better than what I'm doing and a lot more rewarding. So the only way I knew at that time to go from where I was to that state was to kind of give up my law practice as a trial lawyer and kind of self-train and build my own practice in technology law, representing early stage startups, as well as investors in those startups. And so that kind of got me on the journey to technology. And that's when I first started working with VCs around and angel investors around companies I was representing or representing them. From there, I went in-house counsel for a software company. A guy who I had spent 2 years trying to get business from my law firm finally said, no, I'll never hire you, but I will make you my first general counsel. And so that got me really in the belly of the beast, right? Where I was on the road with him, raising capital, managing cap tables, doing partnerships, doing the whole 9 yards. And that was, I really got more and more exposure to venture capitalists and more exposure on boards and things like that. And so I realized I wanted to get into that business. I just had no idea how I was going to get there as a lawyer. There's most people you've seen in VC, there's kind of that tried and true path from like tier one college, consulting, go back for your MBA, come back out, maybe some investment banking, and then into VC, or maybe consulting back to VC, or maybe you do a stint at a startup and back to VC. That wasn't the path I was on. And, I grew up in the Midwest of Ohio, went to like no-name schools, didn't have a network in this thing. So I just said, all right, I have to do this. And eventually, from one crazy M&A deal after another, I ended up working at a Fortune 100 financial services company. And I basically agitated them into becoming a corporate venture capitalist. I kept telling them, hey, we're relying on these technology companies for really important strategic initiatives. We're going to be better using their technology. They're going to be better based on our experience with them. We should start doing deals with them. We should invest in them. We should share in that upside. We're creating a lot of enterprise value together. There's no other way to align with someone that have money at risk with them. And, the CIO at the time, the CISO and COO said, no, we don't do that here. Shut up. You're going to get fired for talking like that. I'm like, I'm the startup guy in this big company. I probably don't belong here anyways, but let's do some deals and have some fun along the way. So slowly but surely, they let me start doing one deal here and one deal there, kind of the worst investor of all time, right? No thesis, no process, no mandates, just extremely ad hoc. But those one-offs turned into IPOs, and they turned into tens of thousands of additional product sales for these companies, not just the startup, but the corporation I was at that time. And so people are like, wow, this thing is kind of working. So ad hoc went to 100 million, went to 330 million, went to a bunch of IPOs and billion-dollar exits. And then from there, just wanted to get into the traditional route. So, that was probably a 15-year journey just there in that time period. But, I
Yeah.
think the real key takeaway is if you focus on it, focus on your goal, your dream, your vision, what you want to do, and do the best work you can every day with what's in front of you, you could get there. So I talk to a lot of younger folks in their careers, or even folks later in their careers that want to get to VC. And I just tell them they just have to find their own way, right? Don't let anyone tell you can't. Don't let anyone tell you don't have the network or you don't have the right training. It might take longer and it might be more painful, but you can get there.
Interesting. And you made an interesting point that you didn't go to an Ivy League B school, but I've seen 1,500 new, seed VC firms which have come up in the last 10 years or
Yeah.
so. Do you think, um, and we've had, 23 and 24 have been tough years for even emerging managers who want to
Mhm.
start their own VC fund. But do you think, uh, can anyone with no Ivy League background, can they start a VC fund now? Or do you think it's better for them to, go to a B school, do the consulting thing or investment banking thing?
I think at the end of the day, becoming a venture capitalist, you either have to raise your own fund or
Mm,
get a job at somebody else's fund.
true.
Um, Getting a job at somebody else's fund is difficult because there's not a lot of new jobs that start every year in venture capital, right?
Yeah.
There's only when you raise a new fund, you can generate the management fee so that you can afford to have employees. And so except for a lot of those top tier VCs, top tier funds that you've had on this podcast, they're on fund 10, 11, 12. That's kind of a machine. Like they know they're going to raise their next fund. You
Yeah.
know, it's you can find your way to build the right resume, build the right network, and try to work your way into those funds. I think starting your own fund is always more rewarding, but also more difficult, right?
Yeah.
Because at the end of the day, you're going to very wealthy individuals or family offices at the beginning to get enough of capital to put together so that you can form a portfolio and get a track record and do that. So it's things where there was more capital going into the system in prior years than there is now. So at the macro level, it's harder. But I think, if you're willing to put the extra, it's going to take years. Like, be clear, it is a multi-year journey if you want to do anything in venture, which most people don't realize. So if you have the stomach for a multi-year journey and probably multi-years without a steady income, at least from venture, you can get there. But it's hard right now. It's much harder than it was a couple years back or several years back. And a lot of people were raising in 2020 and even in or 2019, that 2017 to 2019. But I think it's a good, healthy return to the norm. It's a good, healthy return to discipline, both from the LP level and at the GP level, to bring the right disciplines back to the market.
Yeah. Yeah. No, absolutely. And how did you go from, no thesis to focusing on deep tech and digital transformation and focusing on natural gas
Yeah.
industry?
Before when I was in financial services, I looked at financial services as a huge societal problem that,
Mm.
for the most part, people in the United States and across the globe were either unserved, underserved, or overserved by their traditional financial institution. That's because they would just look at businesses and individuals and families through the lens of their traditional products they had to offer, right? No matter what, you're getting this loan, you're getting this credit card, this insurance policy. There's no innovation to the product, to the delivery, to the offering, to the servicing. So my thesis around that was financial security was core to society, to families. And it needed to innovate and need to bring the best of innovation from the outside in order to get there. So that was my original overall thesis around fintech, quote unquote, insurtech, and I guess wealth tech to a certain extent back then. After I'd spent, I don't know, 10, 15 years doing that, you know, I was ready to make a change. I was ready to make a change in the firm I was at, as well as to potentially open to new industries. And I called one of my partners that I'm with right here now, Rick Fatone, because we had done some co-investing together within InsurTech. Really loved working with them. We always had a great time together, and always enjoyed, each other's company in and outside of the boardroom. So I called him like, "Hey, Rick, I'm thinking about doing something else." He's like, "That's awesome. That's great. I've been waiting for you to come off the bench." He goes, "But if we're not going to do it in InsurTech." I'm like, "What are you talking about?" Lo and behold, what I didn't know about Rick is back in the day, he was an investment banker within the energy sector. And so had kept that practice kind of as part of his career throughout the whole time. And so he had a research the industry. He gave me a bunch of articles. He actually introduced me to a bunch of the CEOs for the companies that are LPs in our fund right now. And he's like, "Yeah, let's take these meetings, look at this stuff. Let's meet together in a couple of weeks when you're back through New York." I said, "Okay, great." And, he goes, "Well, what do you think?" I'm like, "Well, I kind of fell right into your trap because bottom line is what's happening in the energy sector is what happened in financial services 15, 20 years ago. It's those same macro dynamics with regulated industries, risk-averse cultures, conservative business practices, innovation that can enable or disrupt, aging infrastructure, customer satisfaction issues, I mentioned that, people questioning their business model, competitors that they never thought they'd even have to compete with are coming into their space. So it's the same macro all over again. And then once I looked at the energy sector and looked at clean, safe, reliable, cost-effective energy is the hallmark, is more fundamental than even financial security when it comes to keeping families safe, keeping the country secure. Because if you don't have energy, if you're energy poor, you literally have nothing, right?
Yeah.
If you can't turn the lights on, if you can't heat things for your family, if you can't moderate your home or your business, you have nothing. Because you can't operate, right? If the power's not there, difficult to do anything.
Yeah.
So that was even a more inspiring goal for me in industry to work in. And so we started out looking at the industry, and it was kind of from a broader aspect. And what we realized is there's lots of folks doing climate and around electrification.
Mm.
And that seemed horribly overserved, and it was to the disadvantage of the folks within the natural gas industry. And at the time when we started this in 2020, most people were thinking natural gas was going to go away, and it wasn't going to be part of the solution. Lo and behold, here we are in 2024, where people now understand that energy demand of tomorrow, let alone today, isn't going to be met without natural gas and its infrastructure, both its products of today as well as its products of tomorrow, which include hydrogen, renewable natural gas, CCUS, and then also tightening up the systems for less leaks and less need for flaring and less emissions that are there. So we looked at and found this great industry that nobody was serving, that wanted innovation, wanted to access the startup ecosystem, and just didn't have the resources to do it. And so between our backgrounds as bankers and venture capitalists and corporate venture capitalists, and the relationships that my partners had built throughout their whole career, it was just a great opportunity for us to come together and rally around this thing we call green molecules, which is the sustainability, resilience, and digital transformation of the natural gas industry.
Interesting. And what emerging trends do you see as game changers in these sectors right now?
Yep. So we are still big advocates, or will always remain big advocates around hydrogen. We've seen plenty of people flare out on electrolysis and hydrogen, right? That's like making the most expensive energy source in the world. It just never made sense to us. But we like hydrogen, especially with forms of pyrolysis, where they're actually cracking natural gas and forming taking the hydrogen, and then either sequestering or utilizing the carbon that comes off it for other things. We also like hydrogen from synthetic biology, manufacturing capabilities, and using microbes to bring up hydrogen naturally, like those types of things, because hydrogen will play a part decarbonizing a certain sector, certain industries for sure. We like renewable natural gas, where you're actually making more of a circular energy source, where you're taking waste products, whether they be food or water or agriculture, and methanating them through anaerobic digestion processes to make biomethane. Big fans there. We see those as the products of tomorrow for the industry, as well as more point source capture, if not direct air capture around these things.
Got it. And obviously, I'm going to talk about Elon Musk because he's built this
Good.
brand about electric cars and
Yeah.
vehicles.
Yeah.
But do you think we'll have the next wave of airplanes and aviation being hydrogen fueled planes or aircrafts, or is it going to be electric
I
airplanes?
think I'm very of the mindset and approach, and so are we as a firm, that it's an all of the above. And
Mm.
actually, it's like based on the energy demand of tomorrow or even today, it's all the above times 10. Like I think Elon, rightfully so, bashed hydrogen. But if you play his tape from the very beginning, what he's bashing was electrolysis. He's like, it's a horribly inefficient process. I'm like, okay, how about an efficient process where we just put some microbes down a hole and just pull up hydrogen? And it's cheap and it's efficient and it's cost effective and it's safe. Like back when he was bashing hydrogen, there wasn't those types of methodologies happening, nor was there the advancements we have now in pyrolysis that's there as well. So I think we will see use cases for electrification, for hydrogen, and you'll still see gas as well, right? It's just for cost effectiveness, for security, for safety, for reliability. It's going to always be there. It's just a matter of not forcing. You can't pick your energy source, right? You have to provide multiple opportunities. You have to let the market pick, and you have to see what's best for the consumer and for the individuals at the end of the day and the businesses.
Correct. And how do you evaluate the potential of startup when you're considering to invest into them?
Mm-hmm. So we have a relatively fundamental framework we work from around our investments, and we rack and stack each opportunity numerically 1 to 4 on team, technology, market, what we believe to be their unfair competitive advantage, and their fit with our firm. So we look at things that way. Fit with our firm goes directly to our green molecules thesis that we're adamant about. And then, for the teams, we're looking for these amazing leaders that can inspire other folks to come on their journey with them, leave their corporate jobs and join this crazy startup, that can inspire and endear the trust in their customers, that will take a little career bet on the startup to utilize their technology in a pilot, in a demo, and then take it to scale. Also, ones that will endear themselves and be able to have the presence and be able to do the storytelling and deliver and execute to the point where they can get later stage investors to provide them the capital they need. So we're really looking for those teams, because at the end of the day, I don't care what anyone says, VC says, like, we don't know what the market's going to do. We don't know what the technology is going to do. We don't know how competitors are going to react. And the only thing that's going to get you through all that craziness and all those unprepared things is that team and that team you're investing in. Yes, of course, like, we do the work and we make sure the technology can be validated. And we do everything we can to say, okay, you can go from lab to demo to commercial demo to pilot to scale. But at the end of the day, nobody knows for sure. But it's that team that's going to figure it out, and that team that's going to make it happen. So that's really important. Also for us, if it's a good market, if it's a good idea, if it's a good technology, someone else is going to do that. Multiple people are going to do that. So what is that unfair competitive advantage that we believe this team has over the others that we can articulate that gets us comfortable to bet on this team versus any others?
Got it. And you made an interesting point about the team, but do you prefer founders who are new to the market and have that sort of naivety, or would you prefer somebody who's very experienced and knows the market in and out?
What we're seeing right now, and it's no different than what we saw in financial services, in the fintech days where things were too heavy on the tech and not heavy enough on the fin, is the best teams right now, founding teams, are bringing the best of both worlds. They're bringing someone that can test the first principles as a scientist, as an engineer, as an entrepreneur, but they're bringing in industry expertise with them. Because at the end of the day, especially when you're dealing with energy, right? And you've got to get to utility scale on these types of things. You need people that have been through these things and have scaled multi-billion-dollar projects on emerging technologies. You've got to have some people that know how to navigate either through or around the existing infrastructure or the existing companies that are there, as well as the regulatory environment that's there. You can't be completely naive to those market impacts or forces, and also having someone that's learned the lessons of, like, yeah, this is why I didn't scale last time. Make sure we don't make those mistakes here. Or this is what we've seen in 30, 40, 50 years of taking new technologies and products to market, right? Let's make sure we don't make those mistakes and learn from that and optimize what was looked like a win. So I think the right teams have a healthy respect and experience with the existing markets and existing industries, but understand they have technology and innovation that's going to be able to overcome, optimize, and just really destroy the whole thing.
Got interesting. And the last couple of years, I've seen crowdfunding, ICOs, angel syndicates, a lot of different, investment options have been there. But how has your approach to venture capital evolved over, the last couple of years since you've been in the VC industry?
Yeah. I think in the last couple of years, especially as it relates to energy and what we're doing in green molecules, I'm placing more reliance, probably too strong of a word, more importance on non-dilutive funding sources to augment the equity capital we put in. So especially what we do in sustainability and resilience tends to be more your deep tech, hard tech stuff.
Yeah.
The digital transformation is more of software type of stuff. The sustainability resilience that tends to be, even though we go for more capital light business models, it's still relatively capital intensive, right?
Yeah.
So the way to defray a lot of that equity price that's in there is to get access to that non-dilutive funding sources. However, those non-dilutive funding sources have to be directly on point to what you're doing. A lot of entrepreneurs out there chasing grants, like, oh, we're a hydrogen separation company. I see them chasing grants for, you know, RNG. I love RNG, but that's not our company. Don't do that, right? If there's a grant that's on point and supports what we're doing, like let's go after those, and whatever types of loan programs that may be there. So I do like when that comes along. Now, just because you raise a lot of debt or non-dilutive funding doesn't necessarily accrue to the enterprise value of the company until you take that money and execute with it and hit your milestones. So I'm definitely looking more to a lot of the non-dilutive funding sources that are there. I still believe in the importance of strong angel investors that are there. It gets to be it's a lot easier per se on the digital transformation side because a lot of angel investors understand software. Right? It's easy. It's kind of a go to them. It's a smaller subset. If you even look at like angels, it's a smaller subset doing deep tech than there is doing like marketplace or SaaS or CPG or those types of things. So love to see that. I'd like to see a healthier pipeline of angels, and then repeat founders in the deep tech, hard tech space, especially as it relates to green molecules. But yeah, the only major change I said would be my perspective on the non-dilutive financing.
Interesting, because my thesis for my master's non-dilutive funding, which is revenue-based, financing.
Yeah.
And I was like scouting for a few revenue-based financing companies. But when it comes to, before the call, we talked about, how my perspective towards climate tech had changed since I came to Europe. But do you think Europe has the chance to create really, or Europe, or be it any country other than US, has the chance to create really uh, which can really transform, be it in deep tech or in climate
Yeah.
tech, or do you still believe that US has the best chance?
No, I mean, we've invested in Europe. We have one company that we've announced that's in Vienna. There'll be another international one we'll announce relatively soon. You've got some great funds out there between Blackbird and Apex. I think Europe is actually technologically more advanced in a lot of ways when it comes to RNG and hydrogen as well. So at the end of the day, I think the right perspective and the way we look at it, it's not climate investing or climate for climate's sake.
Yeah,
It's if you can generate clean, safe, reliable, cost-effective energy, then you solve the climate problems,
yeah,
right? So I think there's a great mindset to a lot of those entrepreneurs that we've seen in Europe, and across the globe that are focusing really on just it's yes, they want to have climate impact, but they really first and foremost want to create clean, safe, reliable, cost-effective energy for all communities, for all demographics, for both commercial, residential, industrial, every aspect of it. So I think that's real. That type of perspective can come from anywhere. I think there's more capital sources here in the U.S. But like I said, we're a smaller, relatively small fund relative to all these other funds, and we're going internationally. I think it's a little somewhat we have somewhat of an advantage because we're the only one doing green molecules. A lot of people, it's the molecule side of thing is just kind of a offshoot for them, but this is all we do. So I think it's a lot. We have some advantage meeting folks and networking and getting to some of these entrepreneurs. But yeah, I definitely see us doing in fund two. I definitely see us even doing more investing overseas.
mm. Got it. Interesting. And what's been the biggest miss for you, and does it change your mindset and approach when you look at finding more companies?
So we started this fund. We had the first closing of fund one in June 2021.
Mm.
And I thought at that time we're missing out on all these big deals and these big high flyers, right? Because things were coming in, we're looking at them, was like, God, I'm like, for where that technology is relative to the price and the valuation of the company, like none of this is making any sense to me. So like, I felt at the time like I was missing out on a lot of these great deals and these great high flyers because there's some pretty prestigious funds putting some pretty what I thought were crazy valuations in these companies, but they were getting a lot of hype. So for a while, I felt like I was missing out, and we just ran a post-mortem on some of those ones. A lot of those ones we passed on, and some of them, there's a bunch out of business, a bunch that have laid off half their workforce, a bunch that are closing up shop, and shutting down their even pilot plants. So I think, there was the time where I thought we were missing some of the big wins and some of the hypes, and now it turns out to be kind of a more prudent decision to what we did.
Right. And before the call, we talked about how, the venture landscape in the last 2 years have definitely changed. It's become difficult for emerging managers to raise funding. But what's the biggest piece of advice to all new entrants in the venture capital today? If they want to raise funding, want to raise their first fund, is it possible for them to do so, or should they take up a job in a VC firm?
Uh, I think if your goal is to be your own, have your own fun with your own partners and establish your own partnership, you just
Yeah.
have to get out there and do it. It
Right.
gets, it gets, here's my lawyer answer, right? Because I used to be a lawyer. It gets easier and harder if you go work for somebody else, right? If you go work for somebody else in another fund, you'll learn some things,
Yeah.
and you can establish a track record that's there, and then use that to go fundraise. At the same time, the longer you're there, the harder it's going to be to leave,
Right.
right? Because the longer you're there, it's no different than it's especially the larger funds. Like you're going to give up the security that comes from that fund,
True.
from the infrastructure that's there to support you, for that salary and that bonus structure. Hopefully, you're getting carry as well. That's there, and so it's hard to walk away from that and say, okay, I'm going to spend the next 2 years fundraising to
Mm.
get to my first fund. And so I think if you want to start it, you just have to start it. Understand it's going to take longer. It's going to be more painful, and it's probably not going to happen the way you expect it. But if it's really important to you, if it's bigger than just you, if it's bigger than just the fund you want to do, and you're really out there to do something game changing and generational, you'll make it through.
Got it. And how do you approach market sizing, and do you think the best companies can look at expanding their market?
Yeah, I'm not opposed to niche markets to
Yeah.
start with in companies, especially if it's a niche market where you can prove your technology scales and works and
Right.
then expand into other things. I also believe a lot of the stuff we're investing in within the deep tech side of the green molecules thesis are they're creating, they're creating markets that don't even exist today, right? So
Mm.
it's kind of, you have to even see so deep, or you have to believe so deep in the future that they create this market around them. At the end of the day, what I want to see is a company that can be a multi-billion-dollar enterprise, with strong, durable revenues, with really healthy margins on it, and they can dominate their space and win. And that's really it. So if I can see that, um, with these companies in the hundreds of millions of dollars of revenue that has like those healthier margins, like I said, and I could see that repeating revenue basis of that and them growing to things. And they're solving these really hard problems around clean, safe, reliable, cost-effective energy within green molecules. I can get comfortable with the market.
Mm. And it's been only a couple of years for you to deploy money from energy capital ventures. But how do you approach when to sell and when to hold a position for the fund?
Yeah, so some of the base principles, I've always gone with like when the CEO says it's time to sell, it's time to sell, right? If
Mm.
the CEO says I need to get out or I think this is the best time, regardless of how much conviction I may have in the future of it, if that team is done in their head, it's time. It's time to get out. I think there's other things to consider as a GP, as a general partner in a fund, with your fiduciary obligations to return money to your limited partners. Um, And, that's when you can start to look at secondaries. Maybe you can take, especially if you're in early like us, and then, you're 5, 6, 7 years into something and the company's enterprise value has gone up 7, 8x since, you first got in. Every now and then, I think it's okay within reason, like everything else, to take a couple points off the board, like have some position to go forward on it, but take a little bit off the board, get some good marks, put some marks down on your track record, return a little bit of capital just to demonstrate to your LPs you can do that. At the same time, I think it's an important discussion to have with your LPs saying, hey, I could do this right now. Like sit down with your LPAC, your limited partner advisory committee and say, like, here's the opportunity. We've been in XYZ company for 7, 8 years, new investors coming in at this valuation. We can take a couple of points off and deploy capital. At the same time, we think this is going to be a $10 billion company.
Mm.
So let's look at that risk reward ratio that's there. And a lot of general partners don't have that type of conversations with their LPs because at the end of the day, it's your responsibility as an LP to make that decision. But I think when you're a first, second fund, you need to have those types of open dialogues. At the end of the day, our partners have completely deferred to us. It's our realm, our responsibility. But I think it's important just to manage folks' expectations on things. Like we are solving really, really, really hard problems, right?
Yeah.
That's going to take a long time to solve. I mean, these are 10, 15-year journeys,
Right.
right? We had a meeting with our associates today. I was like, you don't understand. We're not going to know if we're good in this for about 10 years, right?
Mm.
It takes that long. I mean, we're creating new science. We're battling engineering challenges, scientific challenges, scaling challenges. We're going to get through those. And then we're going to get through market challenges. And then we're going to have to grow from there, right? And that just takes time.
Yeah.
So, I don't think it's good not to have it's good to have strong LPs that are patient in their capital, especially when you provide the type of strategic value we do to them as to insights to innovation and the market. But at the end of the day, I think it's good just to have everyone on the same page and let them know what the options are.
Mm. Got it. And do you think the best founders really need help from their VCs?
Mm, I think the good of anything always wants to be better.
Yeah.
And you can get better through a lot of different coaches, advices, mentors. I think, VCs can provide value and make CEOs better what they do. And maybe don't take my word for it. Talk to some of my CEOs I've worked with or are currently working with. And you have to meet your CEO wherever they're at. Wherever they're at is where you meet them. And some need help in biz dev, some needs help in recruiting, some in strategy, some in finance. Some just want to hear about what it was like to take 3 or 4 companies public or to sell 2 or 3 other companies for a couple $1 billion. What was it like to be on that journey from obscurity to household name? And I think as VCs, you provide that. And some some of my CEOs don't even want any of that experience. They just want some coaching and leadership direction and advice and to provide some guardrails for them when they think they're making a crazy decision. And I
Mm.
think, as a VC, you have to have the healthy respect that it's your entrepreneur's company. At the
Yeah.
same time, you've got a responsibility to your LPs that have given you capital. And I think every VC has a different way of adding value, and I think different firms do it differently. I do think what I've noticed from the firms that claim to have these whole divisions that help their companies, that
Yeah.
my experience with them as co-investors, that if the company's in trouble and they need those resources, the firms are like, nah, no, it's kind of a waste, no. And if the company's like knocking it out of the park and doing well, they're like, yeah, well, I don't need your resources. I'm
Yeah.
like doing this on my own. And so it's kind of finding the right one. So I don't know if those types of services have really paid off
Mm.
in my experiences. But I think, at the end of the day, entrepreneurs are picking VCs they want to be on this journey with for 10 or 12 or 15 years.
Yeah.
And if that's the case, you just help out where you can and add value as much as you can.
Mm. And uh, what would you think would be the core values or core areas where, VCs and founders are misaligned?
Um, I don't see any misalignment. At the end of the day, both want to build multi-billion-dollar generational companies. That's the
Right.
goal. That is the goal. I've seen different VCs have some bad behaviors and different corporate VCs have bad behaviors because they have different definitions of what it means, or they don't care about making money, or they have different directions on maybe product or strategy or finance. But at the end of the day, everyone's kind of aligned. There will always be a healthy friction on burn rates and runway and some of the bigger discussions, but you want a bit of that friction. Like there's like, we were talking earlier before we started about great business books, right? You read anything from Patrick Lencioni, the foundation of every good organization, every good relationship is conflict. Like you have to have healthy, honest, intellectually honest conflict on things. Otherwise, there's no growth. Without
Yeah.
conflict, there's no trust. Without no trust, there's no accountability. Without no accountability, there's no execution. Like it just all falls apart. So I think you want to have a healthy discussion about those types of things and people that push each other. Like my entrepreneurs push me as much as I push them, and they make me better at what I do. Hopefully, I'm making them better at what they do, right? And so
Yeah.
you want that healthy, intellectually honest, you know, fact based conflict that's there.
Correct. And what has happened in the last 2 years is you've had a lot of people leaving big companies like Google and Amazon. They've been fired. So there are a lot of operators who are looking at getting into new industries. What advice would you give to operators who would want to get into deep tech or digital transformation?
Yeah.
And what should they do if they're not from that industry?
Yeah, I think if you're not in the green molecule space and you want to get into this space, you're no different than what I do every day and everyone else does. You just got to do the work. You have to do read, meet as many people as you can, do as much research as you can, talk to as many folks in the space as you can to learn as much as you can, and then just get in there. The only way to really learn this stuff is to get in and do it. But hopefully you go in there extremely well informed, as researched as you can, and you take it there. Like we've seen this happen within green molecules. I've seen it in life sciences. People going from like consumer product marketplace crap to nothing doing like nothing against those spaces, just not my space, to like life sciences and green molecules. And they do it just by doing the work. And I think what people really have to prepare themselves for, especially, and we see this time and time again, when they go from the Googles and the Amazons or any big company and they want to do the startup world, like having no infrastructure, having no support, doing things on your own, living with like literally day to day, wondering if paychecks are coming or not.
Mhm.
Um, it's a different stress environment. It's a different resource environment. It's a different risk tolerance. And I think a lot of people, especially when you get used to working at Google, where everything is there, at least in prior years, like
Yeah.
it's a hard switch for them.
Yeah.
I've seen it again and again. It's a super hard switch. Everyone says they're ready for it, they want to do it until they got to do it. And someone tells them, well, yeah, you got to order your own laptop and set it up. Right. Or like, I don't know how you're going to get into this company for a discussion. They don't care that you worked at Google. Go find a way.
Yeah.
So I think that's really kind of that mental model of working without a net and limited resources. That's really the hard part about getting into these new spaces.
Correct. And Victor, I quickly want to do the top three. What's your favorite business book?
Favorite business book is Patrick Lencioni's The Advantage, only because it's a great culmination of all his other books that he put into one on team, on communication, on organizational health, on meetings. So it all kind of comes together there. I think that's kind of a critical, true business book that's there. And then I think you need to balance that out with the right types of philosophy books as well that's there.
Correct. Absolutely. We'll put that in show notes. And, if you could go back in time when you started building energy capital ventures, what is one thing you would have focused on or done anything differently?
I think the one thing I would have focused differently was we really, within green molecules, we focused on the distribution side of the network that's there.
Mm.
I think we should have taken a little bit of a broader approach, and that's what we're doing in Fund Two, is we're expanding our network and our family of investors to those that are in the transmission as well as distribution, but transmission exploration, production, the industrial partners as well. Because what we thought at the very beginning was going to be kind of almost niche focused around green molecules and the distribution of natural gas, because that's what really matters, is getting this energy to companies, to families, to the industrial parks. Realized it's a much bigger mandate and it's a much bigger community that really wants to rally around this. And I think we're, like every other first time manager, you just focused on like, oh, we need to get this done. And like, it's taken a long time. And like, we know these have these great partners. Let's just focus. And now even our partners said, Vic, it's time to expand. You need to look at the other areas of the natural gas industry. It's not just the industry, it's the whole value chain. In addition to distribution, to transmission, to exploration production, to the industrial partners, to those key stakeholders that are just outside of that. So I appreciate our partners having the patience with us and now sitting with us as we sit on the cusp of Fund 2 to expand what we're doing to really making those great game-changing generational companies within the green molecule space.
Got it. And what's your favorite online tool? For example, Gmail, Slack, Zoom.
Slack, addicted to Slack, can't live without it. I just it's almost like a drug all the time on it.
Got it. We'll put that in show notes. And Victor, what is the best way people can reach out to you and know more about Energy Capital Ventures?
Best thing, you could check out our website. It's got everything about it, who we are, who we work with, our portfolio. There'll be some new portfolio companies coming up there. And you can reach us through there. And then I'm always just Vic at energycapitalventures.com.
Yeah, and absolutely. We'll put that in show notes. Victor, thank you so much for taking your time and speaking to us. I really enjoyed my conversation with you.
It was my pleasure. Thanks again. I appreciate the opportunity.